Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 29th of July 2019, so welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so I hope you're all feeling nice and relaxed after the weekend. So now we can jump back into the action. Before we actually do that, quick reminder of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our, I do apologize for my voice, not to miss any of our upcoming videos. And also our JFD research page, which you can find on our JFD Bank website. And you can check us out here. You can check out our analysis that we do, and also you can subscribe to our newsletters, especially the strategic report, which we produce on a weekly basis. Every morning we send this one out, so you can get it through your email. So yep, always a good read. So, but for now, let's have a quick look at the markets. Let's have a look at the charts. Now the first one I want to touch on here is gold. Now I looked at this one last week, and basically last week there was not a lot of activity here. It continued to trade within this little range here, roughly between the 1414 level on the downside and the 1430 on the upside. So for now we're keeping a close eye on these two levels. In a way, actually, this line can go away now, because for us the more important one will be right now this tentative upside support line taken from the 1st of July, from the low of the 1st of July. Also, some of you might probably also have something like this on your charts as well, this upside tentative line. But to be honest, for us here, excuse me, for us here, the more important level here is going to be this 1414. Because a nice good drop below this would confirm a forthcoming lower low, and we could see this one sliding towards the psychological 1400 level, or even this, like I said, this upside support line that we're keeping a close eye on, which also coincides with the 200 EMA here on the 4-hour chart. So that's why, guys, this upside line, yes, I mean, you could continue monitoring it, but the more important still level for us is this 1414 zone. Keep your eyes on that one. That's in terms of the downside. In terms of the upside, well, if we do get a nice push above the 1430, then yep, the next target for us is going to be around the 1439. But above that, we still have this the July's highest point near the 1453 zone. So keep your eyes on that one. Good potential target. If this gets a nice good break, then yep, we will aim for higher levels. And one of the higher levels that we've got there is the 1488. So also a good target. That was last time tested in 2013. So for now, of course, we're going to keep it short and simple. For now, we're just going to monitor these two highlighted areas, these two potential breakout points, and then we'll take it from there. Bitcoin is, well, it's not looking the best, but as you can see, last week it kind of held near this key area of support, near the 9,071.70 zone, so approximately around there. So it traveled lower, it almost managed to test that area, but kind of failed to do that, and quickly traveled back to the upside here. So for now we're gonna remain somewhat neutral in this one, even though yes, it is on the decline. In a way, you could start drawing some lines here. The only thing is that they're all going to be very tentative, and one of which probably could be this one, this little tentative downside line, this initial one, or in a way, if you want to keep this line, you can also keep it on your chart. The only thing is, like I said, both of those lines are kind of somewhat tentative, so that's why we're not going to focus too much on them. And what we're going to focus here on more is the support and resistance. So here, for example, if we see a drop below this 9,071 level 70, then yep, we could see further declines as if as a new a forthcoming lower low would be confirmed, and we could then target areas like the low of the 16th of June near the 8,810 area, approximately there. If it continues to slide further, then yep, 8,330 zone could be a nice target as well. So just this little obstacle here, the high of the 13th of June, so it could be a nice target as well. But for now, like I said, the more important thing is to watch this potential breakout point, this at 9,070. In terms of the upside, well, we need to see this one climbing back above this 10,250 zone, approximately around there. In a way, this, if we see a break above this, this would also place the crypto above the 200 EMA here on the 4-hour chart, and we could then target this other good potential area of resistance near the 11,085 zone. So keep your eyes on that one. For now, like I said, even though yes, we are trading still below this downside resistance line, still for us, these are the more important levels to watch. This potential area of resistance near the 10,250 and this support area near the 9,070. So keep your eyes on that one. USDJPY is well, doing nicely everything what I was talking about last week. So basically, it found support near this 108.3738 zone, from which it reversed and pushed to the upside a little bit. Now again, in this situation here, even though yes, it is looking somewhat a bit more positive, what we're going to do here is we're going to monitor some of these key potential areas of resistance, these potential breakout points. So in a way, what you could do here is keep an eye on these last week's highs near the 108.83. If we see a push above this, this would confirm a forthcoming higher high. Initially, we will target the 109 zone, which is which acted as a good area of resistance back on the around the 9th of July, or in other words, the highest point of July. We could see this one climbing towards this area, but if this fails to withhold, then yep, the next potential target could be around the 109.20. So for now, this is kind of the game plan. For now, it is looking quite positive. I mean, it is trying to climb higher, but ideally, for that better confirmation, we would like to see a nice good break above the 108.83 before kind of targeting higher levels. In terms of the downside here, well, it's pretty straightforward, because if we see a drop below this upside line and we see a drop below the this level of support near the 108.3738 zone, then yep, we will target slightly lower areas. Initially, we'll aim for the 108 zone. That's going to be quite an important one to watch. But if this fails, well, further declines are possible. So keep your eyes on this one. Also be very careful this week. On Wednesday, we do have the FOMC interest rate, FOMC statement, and the interest rate decision from the Fed. So we may see a bit of action here. I wouldn't say maybe a bit, but we could see some action here in the USDJPY pair. AUDJPY, the Australian dollar against the Japanese yen. So last week I was talking about this potential, or should I say this range that the pair was still trading in, and as you can see, the pair kind of broke to the downside this morning and broke below this little range, and is now seems to be willing to travel a little bit lower. Now it moved lower. It almost managed to test the 74.85 zone, the one of the support levels that I was talking about. Now it's trying to make its way higher, doing a bit of retracement. But if, let's say, if it struggles to overcome this barrier here near the 75.1215 area, approximately around there, if it struggles to do that, then we could see another leg of selling, potentially maybe bringing this one below the 74.85 zone. Also, of course, keep your eyes on this pair, because we do have the US-China trade talks ongoing, so there might be some news coming out. So if the news are not very good, we could see this one selling off due to increased yen buying. So that's why be very careful with this one, guys. Yes, I mean, for now we are more bearish than bullish on this one, especially if it stays trading below the 75.15 area, approximately around this little zone here. In terms of the upside, if it climbs back above the 75.60 zone, approximately around there, and pushes above the 200 EMA here on the 4-hour chart, this is where for us it could become a little bit more interesting, or should I say for the bulls it could become a little bit more interesting, as we could target slightly higher levels, and initially we will aim for the 76.15, and then we'll take it from there, see what it wants to do after. But again, like I said, for now it is looking more bearish than bullish, but again, be very careful with this one. EURGBP. EURGBP had a crazy week last week. So initially it broke the neckline of this head and shoulders formation, traveled all the way down towards the 0.8890, but from which reversed and pushed back to the upside. Of course, the person who helped EURGBP to climb back up, or in general helped the euro strengthen it a little bit, it was of course Mario Draghi during his press conference. But now you can see that this level here, this is what I was talking about last week. Basically, yes, even if we see a push back above the 0.8955, the more important level for us still remains the psychological 0.90 level, because in order to kind of, let's say, target further higher levels, ideally we need to see a push above this 0.90 level, and then only then we will aim for these previous highs, these July highs near the 0.9051, something like that. But if that fails to withhold, then yep, we could see this one pushing further up. But again, for now, keep your eyes on the psychological 0.90 level. We did have, these are all 4-hour candles. I mean, in a way, we did have a nice, great run already. So this is probably a good area, maybe for a small correction after testing the psychological 0.90 level. I mean, we could see maybe a bit of correction here, given that it is quite, it did have quite a big run here to the upside. So that's why be very careful for now. Of course, if it climbs above the psychological 0.90 level, then yep, you could start aiming for higher levels. But for now, just be very careful, because like I said, we could see a bit of correction and then another push higher. For us to aim for lower levels now, still the level here, this level here, the 0.8955 remains an important one. If we see a drop below this, then yep, we will aim for lower areas, so keep your eyes on this one. GBPUSD, this leads us into GBPUSD. So I mean, this pair is continues to slide. I mean, in general, the British pound continues to slide against its major counterparts. And looking at this picture here, this is what I was talking about last week. If we see a drop below this area, below the 1.23, roughly between 1.2380 and the 1.2395, then yep, further declines could be possible here, unless something drastic happens that will have a good effect on the British pound and pushes this one back above this 1.2395 level, and then yep, we could maybe target some higher levels, or in a way we could target a bit of correction here to the upside. So That's why for now, of course, all this is not looking good for the GBPUSD pair, but in a way, if the next potential target for us here, we need to probably scroll back way back here and jumping into a daily chart. That's what we probably will need to do, because looking at this picture, guys, here right now, you can see that this is the target that we're going to be aiming for, and actually it's actually already balancing around this area here. Let me just quickly zoom in here. So this is the low of the 7th of April 2017. So this is where the pair is currently at. If this fails to withhold, then yep, further declines could be possible. One of the good potential targets here could be around here. Let me just quickly put this one on the chart. This little low near the 1.21 zone, so not far from there, 1.2110, something like that. So that was the low of the 14th of March 2017. So this is where we are at right now. So for now, like I said, we are testing the low of the of April, or actually the lowest point of April of 2017. This is where the pair is right now, but if it fails to withhold, then yep, further declines are possible, and this is where we could start aiming for the lowest point of March of 2017. So for now, guys, all eyes are on this area. Let me just quickly, of course, we are looking at this picture, we are quite oversold, but to be honest, I mean, we've been oversold for many times here, so it continues to just slide lower. So that's why for now, all eyes are on this level here, the 1.2366-65 area. If it holds, we could see maybe a bit of correction to the upside, but if it struggles to get back, let's put it that way, even if it actually overshoots this area here, if it struggles to get back above this 1.2425 zone, this is where probably could become a little bit more interesting. Then yep, of course we will continue targeting to the downside. But if it pushes back above the 1.2425, then yep, we could see maybe this one climbing a little bit higher here, potentially testing this downside resistance line. So for now, keep your eyes on this one. But like I said, for now we are slightly more bearish than bullish on this one, and yep, we will target these further areas, further declines, unless it climbs back above the 1.2425 level. And the last pair for this session is the euro dollar. Now, I do apologize for the amount of lines here, and probably I'll get rid of a few, but I'll keep some of them because, for example, this 1.112225 zone, approximately around this is where the pair is currently sitting at. As you can see, previously it acted as a good area of resistance. We did have a few overshoots here, but kind of stayed still above it. So you can see this is where the pair is balancing right now. So if we see a drop below this 1.1122, then yep, we could expect a further decline, maybe a test of this 1.1110 or even the 1.11 zone, the lowest point of last week. But if that fails to withhold, now this is where it could be, the pair could be entering this the territory of 110, and this is where we will aim for that 110 level. So for now, keep your eyes on these key areas of support. Let's see how this is going to play out. For now, we are more bearish than bullish on this one, but we'll be very careful and continue monitoring the levels here, or the potential breakout levels. So like I said, on the downside is the 1.1122, where it is currently sitting at, but on the upside for us to start, at least considering the upside, is the 1.1190, but to get comfortable with the upside is the 1.1225 level. So a nice break above this could potentially lead towards higher levels. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my Trader's Tea Time, as always, that's 13:15 GMT time. For now, I hope you have a wonderful trading day, and I'll see you later.